JP Morgan once said, "Gold is money, everything else is credit." Some of the oldest and most historic investments in the world are also one of the most precious materials in the world. You would be correct if you guessed gold and silver. For thousands of years, gold and silver have served as a physical symbol of riches that transcends the limitations of any one type of money. Thousands of prospective investments are now available on the market, but for many intelligent investors who are looking for security, gold and silver remain at the top of the list. So, let's learn more about gold and silver investing. Hello 101 community, welcome back to our YouTube channel. In this video, we'll be unraveling the 5 reasons why to invest in gold and silver. Make sure to stick till the end as we unravel all secrets of these ancient precious metals. At the end of the video, we'll tell you a secret, the real reason why we invest in precious metals. Stay until the end and don't miss it. So let's start with the video. Silver and gold are assets with a wide range of applications. Investors are aware of the value that precious metals add to a diversified portfolio, particularly in challenging market conditions. Number 1. Precious metals are status symbols. Precious metals are a status symbol since they are connected with riches and power. For this reason, a lot of people invest in gold and silver. They want to flaunt their achievements and fortune. Jewelry and other ornaments can be made from precious metals. For instance, gold coins are a preferred option for investors due to their beauty and rarity. Additionally, buying precious metals might be a way to demonstrate to your kids that you manage your money wisely. Number 2. Inflation hedge. Most of us have certainly encountered inflation at some point in our lives. It is often defined as the gradual increase in the cost of goods and services. Because inflation reduces the purchasing power of our money. For instance, the quantity of products we could buy with a $100 bill 5 years ago would not buy as much today. It poses a significant challenge for consumers. In other words, when there is inflation, money loses value. In contrast, gold tends to appreciate in value when prices are rising because it would cost more money to purchase an ounce of gold. Because of its limited supply and easy market value, gold was once the investment of choice for anyone looking to protect the value of their money. In truth, gold has a history of protecting investors from inflation dating back to the early 1970s, when Richard Nixon, the U.S. president at the time, closed the gold window, which set the gold-to-dollar exchange rate. In the years that have followed, gold prices have often followed inflation closely, occasionally even outpacing it. According to a World Gold Council analysis, gold has returned 15% annually on average since 1971, when inflation has exceeded 3%, compared to just over 6% annually. The historical evidence lends credence to the appeal of gold as an investment during an inflationary period, which is exactly what we are seeing at the moment. The U.S. price level increased to 8.5% in March, the highest level ever recorded in the past 40 years. Given that both the current pandemic and the conflict in Ukraine are disrupting international supply lines, it is likely that inflation will remain high, which is positive for the future of gold. Number 3. Diversifier. The fact that gold is a perfect asset for diversification reasons is another reason why it should be on every investor's radar. Exchange-traded funds, ETFs, equities, and bonds all have different investing appeals, but they can also be fairly volatile and highly dependent on the health of the economy and the performance of particular industries. In contrast, gold is not directly correlated with these assets and does not move in tandem with the general trend of the world's markets. If anything, gold performs better when the economic outlook is less promising, since investors are more interested in the metal's ability to hedge against inflation and increase demand for it. Adding gold to any financial portfolio is a clear nod to the adage that it's never a good idea to place all your eggs in one basket. Gold has been a more powerful diversifier than silver. Silver has a moderately weak positive correlation to equities, bonds, and commodities, making it a good portfolio diversifier. Gold, on the other hand, is seen as a stronger diversifier, with good reason. Unlike silver and industrial base metals, gold is less impacted by economic downturns because of its relatively limited industrial applications. As a result, it has consistently had very low correlations with other major asset classes and has been consistently uncorrelated to stocks. Let's take a short break. We would like to ask you a small favor. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. You can also support the channel by visiting our merch shop and buy one of our products. The link is also in the description. And now, let's continue with the video. Number 4. Outstanding generational investment. If you've been considering a variety of assets to leave behind for future generations, gold and silver may be the answer. For your great-grandchildren and their offspring, you can think about keeping gold and silver. They'd appreciate it if you did. This is because the value of gold and silver rises over time. When gold and silver are scarce, they may sell for 3 times their original worth. When that happens, your future generations will tremendously profit from your investment. Also, the gold and silver could function as heirlooms, which your generations to come can use to remember and cherish you. Today, one can still find gold and silver that were mined many years ago, and these prices have risen significantly. Number 5. Limited supply. Because of its limited supply, gold is regarded as a scarce resource and, as a result, presents a lucrative investment opportunity. According to the law of supply and demand, when supply remains constant and demand increases, the price of an item rises. Furthermore, it is expensive to create gold, and the expenditures of both exploration and mining the metal from the earth are significant. Gold deposits are confined to particular geographic and geological locations, making them extremely difficult to detect. According to data from the World Gold Council, the entire amount of gold mined worldwide in 2021 was 3,560 metric tons, which is more than 400 metric tons less than the total amount of metal required by all industries. Some researchers predict that gold supply will experience a sharp fall over the next few years and that worldwide mine production has already peaked. As the gold scarcity continues to develop, increased consumer and investment demand for gold is projected to propel gold higher. Even when a gold mine starts producing, the yield is typically small in comparison to the enormous amounts required. And my dear community, here is a bonus point, our opinion on how you should invest in gold and silver right now. The US dollar is getting weaker. Although the US dollar is regarded as the world's reserve currency, a number of factors have led to its decline. Monetary policy is managed by the Federal Reserve, which is the United States central bank. Because the Fed has set interest rates so low, more people are borrowing money. This ease of access to funds eventually results in the dollar's depreciation. In other words, the value of your paper money is declining. Additionally, because the US dollar is not backed by gold, it is unlimitedly printable. The dollar becomes less valuable as more money is printed, making it less scarce. As a result, the expense of living also rises. Investors frequently turn to gold during these times since it is a physical asset, i.e. hard money. Due to qualities like its rarity, longevity, and great demand, gold has intrinsic worth. While gold typically displays an inverse correlation, a negative correlation, with the purchasing power of the dollar, it tends to be uncorrelated, a low correlation with the prices of other assets. Gold and silver investments, like any investments, have advantages and disadvantages. They have good days and bad days. Regardless, their advantages are fascinating. Gold and silver are unquestionably worth their weight since they are inflation-proof and can be invested for generations. So, 101 community, we hope you can use this information for your personal benefit. Stay educated. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, don't forget to check the links in the video description. There are many ways to save money and attain financial freedom. One of the simplest ways is to check our video which points out 25 practical, frugal living hacks for a simpler and carefree life. See you there.